Have you ever wondered how the rich keep getting richer? This question often lingers in the minds of many. The answer is not shrouded in mystery, but rather in a process known as investing. Investing? Yes, you heard it right. But what is investing? Imagine planting a tiny seed in a fertile soil, watering it, and watching it grow into a towering tree. That's akin to investing. You start with a small amount of money, the seed, put it into a profitable venture, the fertile soil, and over time, your money grows, the tree. Investing is essentially the practice of putting your money to work for you. Rather than letting it sit idle in a bank account, you allocate it to ventures or assets that have the potential to generate returns. These could be stocks, bonds, real estate, or even a promising startup. The aim is to grow your initial investment over time, creating a snowball effect of increasing wealth. However, it's not as simple as it sounds. Investing requires knowledge, strategy, and a good dose of patience. It's not about getting rich quick, but about steadily building your wealth over time. It's a journey, not a sprint. Consider the story of Warren Buffett, one of the world's wealthiest individuals. He didn't amass his fortune overnight. His wealth was built through decades of smart investing, making calculated decisions and sticking to his strategy even during turbulent times. Now, you might be thinking, but I'm not Warren Buffett. I don't have millions to invest. And that's okay. Investing isn't just for the ultra-rich. It's for anyone who wants to grow their wealth, no matter how small their initial investment might be. Investing is like a key that unlocks the door to wealth accumulation, allowing you to step into a world where your money works for you, rather than you working for your money. It's a powerful tool that, when used wisely, can help you achieve financial independence and secure a prosperous future. Investing, then, is the secret to building wealth. Every great journey begins with a destination in mind. Imagine embarking on a voyage without a map, drifting aimlessly in the vast ocean of possibilities. It's the same with wealth accumulation. Without clear financial goals, you're like a ship without a compass, lost in the sea of financial uncertainty. Financial goals provide direction, a beacon in the vast financial landscape. Whether it's buying a dream home, retiring comfortably, or even just having enough to take that dream vacation, these goals serve as your North Star, guiding your financial decisions and investment strategies. Think of your financial goals as a personal roadmap. They help you plot your course, identify the milestones, and determine the resources you'll need to reach your destination. They provide a clear vision of what you want to achieve, giving you a sense of purpose and motivation to stay the course, especially during tough financial times. But here's the kicker. Achieving these goals is not a matter of simply saving money. It's about making your money work for you. And that's where investing comes into play. Investing is not just about growing your wealth. It's about aligning your financial resources with your life's goals. It's about using your money as a tool to create the life you envision. Investing provides the vehicle to reach your financial destination faster and more efficiently. Consider this: if your goal is to buy a dream home, saving alone might take you decades to accumulate the necessary funds. But if you invest wisely, you could potentially reach your goal much sooner. Similarly, if retirement is your aim, smart investing can help ensure you have a comfortable and secure life post-retirement. In essence, investing serves as the engine that drives you towards your financial goals. It empowers you to take control of your financial future, turning dreams into reality. So as you set out on your wealth accumulation journey, remember to define your financial goals clearly. Make them specific, measurable, achievable, relevant, and time-bound. This way, you're not just dreaming, you're planning. Remember, a goal without a plan is just a wish. Would you believe that a snowball could turn into an avalanche? Now let's unravel the magic of compound interest. Picture a snowball rolling down a hill. As it travels, it picks up more snow, growing larger and faster. This is much like compound interest, where your money gathers momentum over time, growing faster and larger. Imagine you plant a small seed in fertile soil. With the right care, it grows into a healthy tree bearing fruit. Now, imagine if those fruits contained seeds that could also grow into trees. That's the essence of compound interest. Your initial investment is the seed, and the interest it earns are the fruits. With time, the fruits themselves start bearing more fruits, Let's take an example. Suppose you invest $100 today at a return rate of 5%. At the end of the year, you'll have $105. Sounds simple, right? But here's where the magic happens. In the second year, you're not just earning interest on your initial $100, but also on the $5 you earned as interest in the first year. This process repeats year after year, and your money starts to grow at an increasing rate. What's more, even small amounts can turn into significant wealth over time, thanks to compound interest. Regularly investing small sums can lead to a substantial sum in the future. So, don't underestimate the potential of even nominal investments, as they can grow exponentially over time. The key to leveraging the power of compound interest lies in time and patience. The longer you leave your money invested, the more time it has to grow and compound. It's like baking a cake. You can't rush it. You have to give it time to rise. So, next time you think about investing, remember the magic of compound interest. It's not just about the money you invest, but also about the time you give it to grow. And with time, your investment snowball can indeed turn into a mighty avalanche. As Albert Einstein once said, compound interest is the eighth wonder of the world. Why put all your eggs in one basket when you can spread them out? This old saying holds a fundamental truth in the world of investing. It's all about diversification. But what exactly is it? Imagine a farmer with a field of crops. If he plants only one type of crop and it gets attacked by a disease, his entire harvest is at risk. But if he plants a variety of crops, a disease hitting one won't wipe out the entire harvest. His risk is spread out or diversified. The same principle applies to investing. Diversification, in the context of investing, is the practice of spreading your investments across different asset classes and industries. It's like creating a financial buffet with a mix of stocks, bonds, real estate, and maybe even some commodities like gold or oil. This strategy aims to maximize returns by investing in different areas that would each react differently to the same event. Let's take a more concrete example. Say you've invested all your money in technology stocks, and then there's a sudden tech market crash. Just like the farmer with only one crop, you stand to lose a significant portion of your investment. But if your investments were diversified, say into healthcare, utilities, and consumer goods, a tech crash wouldn't hit your entire portfolio. Some sectors might even benefit from it, balancing out your losses. Diversification doesn't guarantee profits or protect against all losses, but it does help you manage risk. It's about balance and not putting all your faith in one sector or type of investment. It allows investors to ride out the highs and lows of the market, which is particularly important when investing for the long term. And remember, diversification isn't a one-time task. As market conditions change, you may need to rebalance your portfolio to maintain the level of diversification that suits your investment goals and risk tolerance. It's an ongoing process, a part of the journey in the world of investing. Diversification, therefore, is your armor against the unpredictable market. So spread your eggs, or rather your investments, and let the power of diversification work for you. Time is money, and in the world of investing, it's golden. The clock's ticking might be the most valuable sound you'll ever hear, especially when it comes to building wealth. Let's explore why starting your investment journey early can make a significant difference. Imagine two friends, Alice and Bob. Alice, at 25, decides to start investing. She puts aside $200 every month into a diversified portfolio. Bob, on the other hand, waits until he's 35 to start doing the same. Fast forward to when they both reach 65. Alice has been investing for 40 years, while Bob for 30. Given an average annual return of 7%, even though Alice and Bob invested the same amount each month, Alice's portfolio would be significantly larger. Why? Simply because she gave her money more time to grow. This illustrates the powerful concept of compounding. The more time you give your investments to grow, the more they can compound and expand. It's like a snowball rolling down a hill, picking up more snow and gaining size as it descends. So, if you're in your early 20s or even younger, you're in a prime position to start investing. Even if you're older, it's never too late to start. Remember, the second best time to plant a tree is now. Starting early also allows you to take on more risk. Younger investors have a longer time horizon to recover from any potential losses. This opens up the opportunity to invest in higher risk, higher reward assets that could significantly boost your portfolio's growth over time. Furthermore, starting early cultivates good financial habits. Regular investing encourages discipline and patience, skills that are invaluable in the journey to financial independence. It makes you more comfortable with the idea of investing, and over time, you'll become better at making informed decisions. In conclusion, time is a precious asset in investing. The earlier you start, the more time your money has to grow. So seize the day. Start investing now. Remember, the journey of 1,000 miles begins with a single step. The early bird indeed catches the best investments. Investing is not about avoiding risks, but managing them. Just as a ship captain navigates stormy seas, an investor must chart their course through the turbulent waters of the market. This is the art of risk management. Risk management is like a safety net, designed to prevent your financial dreams from crashing to the ground. It's not about eliminating risk, but rather about understanding and controlling it. It might seem daunting, but don't worry, there are several strategies at your disposal. Firstly, diversification. Imagine putting all your money into a single company's stock. If the company does well, you're in the money. But if it tanks, so does your entire investment. That's putting all your eggs in one basket. Now imagine spreading your investments across different companies, industries, and even countries. This is diversification. It's like having eggs in many baskets. If one basket falls, you still have others intact. Secondly, asset allocation. This involves balancing risk by dividing your investments among different asset categories, such as stocks, bonds, and cash equivalents. Each asset class has different levels of risk and return, so each will behave differently over time. Your ideal asset allocation is a mix that has the potential to meet your financial goals while minimizing risk. Lastly, thorough research. Before you invest, get to know the company, understand the industry, and analyze the market trends. It's like doing a background check before hiring someone. You wouldn't hire a stranger on a whim, would you? Similarly, don't invest in a company without doing your homework. Remember, even seasoned investors face risks, but they know how to manage them, and now so do you. It's okay to take risks as long as they're calculated and well managed. After all, no risk, no reward. In investing, the brave may not live forever, but the cautious do not live at all. So be brave, be smart, and most importantly, manage your risks well. The world of investing awaits you. Knowledge is power, especially in the realm of investing. The more you know, the better equipped you are to make smart investment decisions. Investing isn't a one-time event. It's an ongoing process that requires vigilance, curiosity, and a thirst for learning. In the fast-paced world of finance, new trends and investment opportunities emerge every day. Understanding these trends and being able to navigate the ever-changing financial landscape is crucial to maximizing your investment returns. Think of it as being the captain of your own ship sailing through the vast ocean of investing. You wouldn't set sail without a map, a compass, or a clear view of the weather conditions, would you? Similarly, staying informed about market trends, economic developments, and investment opportunities is akin to having your map, compass, and weather report. They enable you to chart a course that aligns with your financial goals, steer clear of potential pitfalls, and seize opportunities that come your way. Continuous learning is also an essential part of staying informed. The world of investing is complex and multifaceted, with numerous asset classes, investment strategies, and financial instruments to understand. Therefore, it's important to continually expand your knowledge base, whether that's through reading books, attending webinars, enrolling in online courses, or simply staying updated with financial news. Remember, information is your ally in the world of investing. It helps you understand the risks involved, evaluate potential returns, and make informed decisions. It empowers you to be proactive rather than reactive, to anticipate changes rather than respond to them, and to take calculated risks rather than gamble on uncertainties. In the end, staying informed isn't just about keeping up with the latest trends or understanding complex financial jargon. It's about equipping yourself with the knowledge and insights needed to navigate the investment landscape, make informed decisions, and ultimately achieve your financial goals. So make it a habit to stay informed. Keep learning, keep growing, keep investing, because when it comes to investing, knowledge isn't just power, it's profit. Stay informed, stay ahead. In the world of investing, patience is indeed a virtue. In our quest for financial freedom, it can be tempting to seek quick returns. We're often drawn to exciting stories of overnight millionaires and skyrocketing stocks. But here's the truth. Successful investing is rarely about instant gratification. It's about discipline, patience, and a focus on the long term. Imagine planting a seed. You wouldn't expect a full-grown tree overnight, would you? You water it, nurture it, and give it time to grow. Similarly, your investments need time to flourish. They need the right conditions, care, and most importantly, they need time. The beauty of long-term investing is that it shifts our focus from the daily ups and downs of the market to the bigger picture. It's not about timing the market, but time in the market. It's about riding out the short-term volatility and allowing your investments to grow and compound over time. Successful investors understand this. They know that wealth is not built overnight. It's built over years, even decades. They're not deterred by temporary downturns. Instead, they see them as opportunities to invest more at lower prices. They keep their eyes on their financial goals, and they stay the course, no matter what the market throws at them. But patience doesn't mean inaction. It means making informed decisions, regularly reviewing your investment strategy, and adjusting it as needed. It means resisting the urge to react impulsively to market news. Instead, it's about making thoughtful, disciplined decisions that align with your long-term goals. In the end, the value of a long-term perspective in investing is immeasurable. It's the key to weathering the storms of the market. It's the key to avoiding costly mistakes and making sound decisions. It's the key to building sustainable wealth. Remember, Rome wasn't built in a day, neither is wealth. Patience, discipline, and a long-term perspective are your allies in the journey towards financial freedom. Embrace them, and you're well on your way to becoming a successful investor. Sometimes, a guiding hand can make all the difference. This is particularly true when it comes to navigating the complex world of investing. Just like a ship needs a seasoned captain to steer it through stormy seas, an investor, especially a novice one, can benefit immensely from the advice of experienced professionals. Investing is not merely about buying low and selling high. It's a multifaceted process that involves understanding market trends, analyzing financial statements, assessing risk, and making informed decisions. This is where investment professionals come into the picture. They bring to the table years of experience, in-depth knowledge, and a thorough understanding of the market dynamics. Financial advisors are like your personal finance coaches. They help you identify your financial goals, develop a plan to achieve them, and guide you through every step of the investment process. They take into consideration factors such as your risk tolerance, investment horizon, and financial goals to create a personalized investment strategy that suits your needs. Moreover, they keep you informed about the latest market trends and economic developments, helping you to make informed investment decisions. They can provide insights that you might not have thought of or resources that are not readily available to the general public. Investment professionals can also assist in managing your portfolio, ensuring it remains balanced and aligned with your investment goals. They monitor your investments, make adjustments as necessary, and keep you on track towards achieving your financial objectives. And let's not forget about the psychological aspect of investing. It can be stressful and emotionally draining, especially during market downturns. A financial advisor can provide the much-needed emotional support, helping you stay calm and focused during turbulent times. In conclusion, seeking professional advice can be a game changer in your investment journey. It can provide you with the confidence, knowledge, and tools necessary to navigate the complex world of investing successfully. Investing, after all, is a journey best undertaken with a trusted guide. The journey of 1,000 miles begins with a single step. And so it is with investing. The first step is always the hardest, but it's the one that counts the most. It's the step that sets the direction, that sets the pace, that sets the tone for your journey towards building wealth and achieving financial freedom. You've uncovered the mystery of wealth accumulation, understood the importance of setting clear financial goals, and learned about the magic of compound interest. You've discovered the power of diversification, the benefits of starting early, and the art of risk management. You've realized the need to stay informed and the value of a long-term perspective, and you've seen how professional advice can guide you on your journey. But all of this knowledge, all of these insights, all of these tools are of no use if they're not put into action. It's like having a map to a treasure, but never setting out on the journey. It's like having a recipe for a delicious meal, but never cooking it. It's like having the keys to a dream car, but never driving it. And so the time has come for you to act, to invest, to start your journey towards financial freedom, to explore different investment options and set your financial goals, to take control of your financial future, to make your money work for you, to build wealth. Remember, investing is not a sprint, it's a marathon. It's not about getting rich quick, it's about building wealth slowly, steadily, and surely. It's about patience, discipline, and long-term perspective. It's about taking calculated risks and making informed decisions. It's about learning, growing, and adapting along the way. So are you ready? Ready to take that first step? Ready to start your investment journey? Ready to embark on the road to financial freedom? Remember, the journey of 1,000 miles begins with a single step, and today, that step is yours to take. Your journey towards financial freedom begins today, so why wait? Take that first step now.